Joining us now is our guest, Mohammed Apabhai. He's Citigroup's head of Asia Trading and Strategy, and we're also joined, of course, by Zeb and David too. Mohammed, let's start things off with a look at Europe. Again, it comes back, the Dutch government about to fall apart, the French electorate deciding they perhaps don't want Nicolas Sarkozy, but that all will be revealed on the 6th of May. And Spain in recession again.
Yes. So, again, we're back to that old European story that we've been probably talking about for the last 2 years. A lot of uncertainty, a lot of news events, markets very elevated, equity markets very elevated away from the point at which central bankers will be forced to act. So still a lot of nervousness that we're seeing in equity markets at the moment. We're seeing really a shift to quality. So if you look at bond yields, if you're looking at Hong Kong bond yields, Australian bond yields and JGBs, all at their year highs, or lows in terms of yields. So we've got this thing at the moment where the bond markets are actually quite scared, and the equity markets are also scared, but also very elevated. So
yeah, they're a bit scared. I mean, we've seen declines. I think the worst loss in Hong Kong in close to 6 weeks.
Yes.
Yesterday, down close to 2%. Is this a repeat of 2011? I got to ask you
It does feel a bit like that, doesn't it?
It feels like that, but I think we're sort of at the same stage as we were in March of 2011. So where we are right now is that equity investors have given back their gains for 2012. So now they're at the point at which they will either make or break, so they'll either double up or they'll quit. And so we're waiting for what comes out of the FOMC and what comes out of the BOJ later this week. And if they come out with some liquidity or some dovish action, then we should continue higher. Otherwise, we're going to give back most of the gains for 2012.
So everything depends on the Federal Reserve once again? I mean, what is the whole weight of the entire global markets weigh on their shoulders?
Yes, unfortunately, that's the job that they're doing. It's the Federal Reserve, and this time they're going to be aided again, like the Bank of Japan. Remember, in March of 2011, markets were at a pretty similar sort of place, and then the Bank of Japan came in and intervened, and they drove the markets up again.
I wonder if we're in a new era of yes,
as opposed to an era
of political risk here. I mean, you saw the Dutch government fall overnight. We have the France elections, which are obviously very interesting to see how what the French are thinking right now. Do you think that introduces a new element of uncertainty into the Eurozone's already serious debt problems?
I think it does, because we've already had problems of growth, which is what the market's already been talking about. What we're now detecting is the populations turning around and in some ways almost rebelling against the austerity.
Say no more.
Yeah.
Pretty much.
Yeah. And so that introduces an additional element of uncertainty. I think when the dust is all settled, though, I think basically it'll probably be business as usual, unfortunately.
I mean, we're going to go back to business as usual. I mean, yes, we're getting a lot of talk right now because, you know, French election, it's election season. But I guess once you mentioned there, once the dust settles, we're going to go back to square one again. And we're going to see a recession. We're going to see more budget cuts. What do you think?
Well, I think so, because I think the room for maneuvering is still very tight. I mean, at the end of the day, you know, you can be anti-market if you don't have to rely on markets for funding. If you do, then, you know, it's not saying that you have to do everything the market tells you, but you do have to be certainly sensitive to what the market does. So I think the room for maneuver is probably fairly limited, and then you have, you know, the rest of the European Union as well.
Okay, so clearly politically tense at this point. That's affecting on the markets. But what about actual growth? I mean, didn't we see manufacturing shrink in the Eurozone?
It shrank even more. Well, it was expected to shrink. It was shrinking last time, but it shrank even more. There wasn't an improvement was expected.
Manufacturing was a bit disappointing. Yes. I mean, that is the powerhouse of Europe. So, you know, combine that with also the manufacturing shrinkage in China. I mean, do you have any concerns about how the economy is growing, the global economy is growing?
I think that we're probably starting to bottom in terms of the economic situation. I mean, certainly in China, the market has been very concerned because of what they're seeing in Europe. So the thinking being, if European economy is slow, then China slows down dramatically with it, and maybe something worse happens. I was in the US last week, and I can tell you that from what I saw, at least, there didn't seem to be much signs of a slowdown.
Well, it depends where you were. Where were you?
I was all over. I was New York, Boston, Kansas, San Francisco. I was basically doing a trip right across the country.
How did Kansas feel compared to, let's say, New York City then?
I was surprised as to how bullish Kansas was.
Wow, this bullish Kansas.
Isn't it kind
A
of
lot
like
of designer
Dorothy?
shops in Kansas.
You know you're not in Kansas anymore.
Some of these places, I don't know if you've been reading about the shale gas, the oil industry that's taken shape in places like North Dakota. These are boom towns where people are getting paid more than television reporters. In some cases.
Wow, that's quite remarkable, isn't it? My goodness.
It's not saying a lot, is it? But, you know, there are some of these unexpected places in the United States that are doing phenomenally well. It's on the resource.
Yeah, I think it sort of,
Really?
it doesn't feel...
So where's this 8% unemployment then in the U.S.? Are you saying it's not in
Well,
those
I mean,
Midwest
there are
states?
certain... Well, you look at places like
pockets, aren't they?
Detroit, yes, they have problems. But I'm talking about some of these resource-rich areas, very specific areas in North Dakota. I think Montana's getting into the
Are we
game.
seeing the start of a new two-track economy like Australia? We could see for the U.S. really.
Are we going to see you move to the Midwest?
No, I will not be taking one of those
you don't want to have more
oil
than a TV
jobs in the
reporter.
Midwest. Hong Kong is a good place to be.
All right.
Go
well,
on, what's your view on all this? And you know, what's your top pick right now when it comes to your trading strategy? You know, when you look
I
at
actually want to know
overall.
if you're going to double up and try to we can make some money for the rest of this year, because you make it sound like a casino right now for the
I
investors.
think for the next couple of months, it is pretty much a double-up sort of scenario. I think you got to be, it is a decision for the brave. So we're recommending playing it through the options market, where the volatility is very low. But you want to be in the markets where you're seeing easing coming through. So perhaps Japan and China H shares would probably be the two best picks. We don't like the situation in Korea so much. Taiwan is probably a bit more of a speculative play, and India just seems a bit dangerous at the moment.
Dangerous.
It does rather.
Okay. Compared to what?
I mean,
Europe?
the risk-reward, I still feel India potentially could go up, but there is also policy uncertainty in India and, you know, a potential action from the currency and bond markets as well.
Okay, Mo. Well, you know what they say, you got to be in it to win it. Thank you so much for joining us.